From the heart of where innovation, money, and power collide, in Silicon Valley and beyond, this is Bloomberg Technology with Emily Chang.
I'm Emily Chang in San Francisco, and this is Bloomberg Technology. Coming up in the next hour, a blow to regulators' efforts to break up Facebook, but maybe not as big a blow as some might think. A judge dismisses a major antitrust suit filed by the FTC and states' attorneys general against Facebook, and the Biden administration upping its scrutiny of Google. We'll have complete coverage from all sides. Plus, crackdown on crypto from China to the UK. Is it a sign the market is maturing? That's what the crypto bulls say, and Bitcoin is bouncing back. But we will assess the real and remaining risks. We'll have analysis. And how a massive recall in China is impacting Tesla and its shares. We'll ask analyst Dan Ives of Wedbush about that and more. All those stories in a moment, but first, shares of big tech getting plenty of attention on the back of this continued antitrust drumbeat. A victory for Facebook, but more pressure on Google. Bloomberg's Kriti Gupta in New York with more.
Well,
Kriti?
Emily, let's just start off macro here. Green on the screen for those big tech shares. They actually had a very risk-off day, which was a good thing for those tech shares. You can really see the S&P 500 having kind of a meh 0.2% gain, but you really see the outperformance of the NASDAQ 100, and it gets even better when you see those semiconductors index that really rallying thanks to NVIDIA and some good signs, potentially some softening when it comes to that ARM deal approval. But let's just look at how this has been performing, growth versus value in the last month in particular. If you look inside my terminal right over here, you can start to see that the equal weight index, that's that white line, still making it right around the levels of that Powell meeting. So not a ton of enthusiasm there, but when you see that kind of hawkish pivot, you do see that risk-off move, and that's really where you see that S&P 500 outperformance. Why such a divergence? It's all about those tech shares. Emily, June has really been a good month for that sector, but let's just hit it back to that antitrust kind of talk, because that's really where a lot of the action was when it came to big tech. Facebook in particular rallying pretty hard. This, of course, coming after the company's court case around having a monopoly in social networking. That was thrown out by a Washington judge. Those shares really rallying and taking the benchmark with it. But to the downside, you did have Google, that Trump-era probe. Well, the DOJ just extended it. It did weigh on shares of Google intraday, but it looks like they've kind of paired some of those losses, ending about flat on the session, Emily.
All right, Kriti, thanks so much. We're going to dive into this, and I want to start with Facebook, digging into what is happening there. The social network winning its request to have two antitrust cases dismissed, one by the FTC, the other by a coalition of states. The judge throwing out the suits with this explanation, quote, although the court does not agree with all of Facebook's contentions here, it ultimately concurs that the agency's complaint is legally insufficient and must therefore be dismissed. As Kriti mentioned, Facebook shares jumping after this victory, pushing its market value over $1 trillion, making the social media giant the fastest company to hit that milestone. For more, I want to bring in Adam Kovacevic, who previously led Google's U.S. public policy campaigns on privacy, security, antitrust, and more, as well as Jennifer Rhee of Bloomberg Intelligence. Adam, Jennifer, thank you both so much for joining us. Jennifer, I want to start with you. The interpretation of this ruling by the judge is that this is a huge blow to the FTC, to the states, and to regulation and regulatory efforts against Facebook in general. How would you assess it?
Well, I would definitely agree. It's a pretty huge blow to the states because their suit was dismissed with prejudice, which means they can't really take a second stab at the apple here. The FTC's was not. The FTC will be able to refile their case, and even though it really was a pretty good decision for them, I think because some of the problems the judge had with the case are going to be very difficult for them to fix. They can replead, they can refile, they can try again, and the judge actually said in his decision that he does think that the FTC may be able to fix the deficiencies with a repleading, with the new complaint. So it's not over until it's over. A good day for Facebook, but it's not finished yet, and I do believe the FTC is likely to refile this case.
Interesting. So, Adam, what would your interpretation be?
Well, I think one of the things you saw the FTC do, what the judge said, is they defined a market for personal social networking and then said Facebook had 60% of that market. But they didn't say who else was in that market. And so the judge, I think, called them out and saying that the FTC had failed the first test, which is to define the market for who's competing against it. It's a little bit like saying the FTC suing Marvel for monopolizing the market for superheroes. What's a superhero? Does a superhero wear a cape? Do they wear a mask? They have to define what it means. And that's really the critical first step. It doesn't mean the FTC can't come back and refile the case, as Jennifer said, but they have to have that first critical step of defining really clearly what the market is that they think a company is dominating.
Facebook saying in response to this victory, quote unquote, in a statement today, we're pleased that today's decisions recognize the defects in the government complaints filed against Facebook. We compete fairly every day to earn people's time and attention, and will continue to deliver great products for the people and businesses that use our services. Now, Jennifer, Facebook has always argued that the FTC has been asking for a do-over here, that the FTC approved the acquisitions of both Instagram and WhatsApp at the time, and that they have never explained why they want to reverse that decision at this point. You would think that their first objective would be to prove that Facebook is a monopoly. Why did they fail to do that?
Well, I think part of the problem is that this is a very difficult thing to lay out. You know, in a complaint, you can't just make a bare allegation. You know, when you make an allegation, you have to at least provide enough facts to back that up, to make it plausible that is possibly occurring. And here, you know, I completely agree with Adam that they just said it's personal social networking services. They didn't say what that includes, what it doesn't include. And when they laid out the 60% market share, you know, they were inconsistent because they said they have 60%, but yet they have no other competitors. It's just Facebook and Instagram. Well, then who makes up that other 40%, which is inconsistent? And the judge observed this. The judge saw this. And this is the very first step in a monopolization suit. You have to show monopoly power, and you have to show monopoly power in some way. You have to show some power to control price or control output, or you have to show a market share that suggests you could do so, and you can't just make a bare allegation. You have to back it up. And they failed to do that. And the judge is going to give them a chance to try to do it, but I think this could be a very difficult task for them.
Interesting. Well, you wonder if they'll have a better approach under Lina Khan, approved as the new chair of the FTC. Adam, how do you see this in the context of the increased scrutiny coming from lawmakers, the House looking and debating those various antitrust bills last week, my interview with Senator Amy Klobuchar, counterpart in the Senate, saying they're also going to be doubling down on tech antitrust scrutiny? Taken together, it certainly seems like Congress is determined, but the big question is, will lawmakers actually be successful at proving these cases?
Yeah, I think there's clearly a desire on the part of most people for the government to scrutinize big technology companies, to regulate them appropriately, and that's something that has a lot of support. That doesn't mean that the government doesn't have to go through the necessary steps to really build a strong case. And I think that is a tension that you're going to continue to see here. There is a lot of desire for the government to do something against the big technology companies, but those arguments have to be based in facts and law, starting with what is the relevant market. And sometimes there's an instinct on the part of regulators to define a market really narrowly to bring a case. And I think we see in rulings like today that if they really want to bring those actions, it really has to be based soundly on the facts and law, not on identifying a political target.
Now, obviously, you worked at Google for years, helping Google defend Google against this type of criticism. What do you make now that the DOJ, that case is moving forward? They're scrutinizing now other parts of Google's business. This DOJ suit is now the biggest threat to big tech across the board. How big a threat is it?
You know, I've lost track of all of the suits against the big tech companies. There's so many of them. But I think, you know, and again, I think it's actually appropriate for government to scrutinize. I think most people want government to be playing that role. This is actually this topic of advertising technology is already the subject of a lawsuit against Google by the Texas Attorney General that was filed last year. That's working its way through the courts. And I think we'll see what happens. But in some ways, I think the ruling today in the Facebook case is a good reminder for regulators that they really need to be sure that these kind of cases are based strongly on the facts and law of a market. There's a lot of competition in advertising technology. If they decide to bring a case there, it needs to be based firmly on the market as the regulators assess it. And because this is very unusual for the case to be dismissed at this stage, as Jennifer said, and that's not something that most regulators and law enforcement want to have happen. So they need to, bring strong cases if they're going to do that.
Adam, talk to us about the lobbying that's going on behind the scenes. I mean, obviously, these tech companies are very well-resourced. They've got huge teams in Washington trying to make sure that they prove their case, whether it's behind closed doors or, in public hearings. Talk to us about the lobbying efforts happening and, why haven't we seen as much scrutiny of Microsoft, for example, which is, to be fair, now has a $2 trillion market cap?
Yeah, absolutely. So I think that it makes sense that the companies are saying, look, some of these proposals in Congress, for example, that would say potentially ban Amazon Prime or Amazon Basics. If Amazon, Amazon wants to have something to say about that, right? They want to be able to say that could have a really negative impact on not only their business, but on their users. And I think it makes sense for companies to do that. So sure, I think you are seeing companies speak up. You're seeing a very different approach, by the way. You mentioned your interview with Senator Klobuchar. Senator Klobuchar has taken an approach of approaching antitrust regulation from an industry agnostic, company agnostic approach. And while I don't love everything in her bill, I think it's a very different approach than the House has taken, which has really been to single out Apple, Amazon, Google, Facebook, and Microsoft. And that's a very different approach.
Interesting. All right. And certainly so many layers here. We're going to keep covering this story as the drumbeat continues. Adam Kovacevic of the Chamber of Progress and Bloomberg's Jennifer Rhee, thank you both so much for helping us break that all down. Meantime, 2 million people watch movies at AMC theaters in the U.S. from Thursday to Sunday. That's the busiest weekend since the company closed its theaters in March of 2020 at the start of the pandemic. Another 500,000 moviegoers went to AMC locations in Europe and the Middle East. That's also a post-pandemic record. Coming up, Bitcoin and other cryptocurrencies back up even after a ban on Binance markets in the UK, an affiliate of the massive exchange worldwide, Binance. We'll have the latest next. This is Bloomberg. Bitcoin rising despite a regulatory crackdown in the UK. The Financial Conduct Authority banning Binance Markets from doing business in the country. That's an affiliate of the top crypto exchange, Binance. Joining us now to talk about the Bitcoin bounce back, why it's happening, Bitwise CAO Matt Hogan. Matt, why do you think Bitcoin is bouncing back given the continued regulatory drumbeat, the crackdown in China, now here in the UK, and, no answer essentially from the United States yet?
I think it's actually bouncing back because of that regulatory clarity. I think crypto investors realize that the path to a bigger crypto future lies through institutional adoption, and the pathway to institutional adoption lies through regulatory clarity. What we got with the Binance announcement in the UK and also in Ontario was a little bit more regulatory clarity. People think that regulation is bad for crypto. It's actually the single biggest driver of the bull market. More regulatory clarity means good things for crypto, and that's what we're seeing today.
Meantime, we saw huge volume over the weekend. I'm curious, who's trading crypto over the weekend? Why don't we see so much activity? I mean, I know it's trading 7 days a week, but the weekend in particular seems to be quite eventful.
Well, first, I think it's wonderful that crypto trades over the weekend. I think it's a strange anomaly that most capital markets shut down for the weekend. So it's that greater price discovery. It's a mix of retail traders, both in the US, UK, and internationally. A lot of Asian retail trading taking place on the weekend as well. It's a slightly different investor mix than you see during the week. You can see slightly more volatile movements on the weekend, but it's part and part of what crypto is. It's a global market. It's a 24/7, 365 market. And you can see a little bit more volatility and slightly different investor types on the weekend than you do during the week when institutional investors like Bitwise come into the market in a regular way. But it is part and parcel of what happens in this 24/7 market.
Now, on Friday, I spoke with MicroStrategy CEO Michael Saylor, who, of course, will ultimately own 1 in every 200 Bitcoin ever minted if he never sells. He doubled down. He's still bullish. He thinks the China crackdown is a huge mistake. We also saw Bitcoin move down about 1.5% during that interview. I want you to take a listen to what he had to say about China's so-called mistake. Take a listen.
We think the primary dynamic is the China exodus. There's a forced and there's a rushed exodus of capital and mining from China that was a bit of a surprise that kicked off in May. And that's driving the dynamic in the market right now.
Now, Matt, again, Bitcoin dropping 1.5% during that interview. Do you think his comments drove some of the trading that we saw over the weekend, some of the movement that we've seen over the last couple of days?
I think what he's talking about is what's driving this. Again, what's happening in crypto right now is you have some short-term negative news that leads to long-term positive results. China is a great example. China banning crypto mining, as Saylor was talking about, leads to short-term volatility because crypto miners in China may sell some of their holdings to deal with the economic uncertainty. There may be a short-term dip in hash rate, but long-term, the health of Bitcoin improves as the mining activity spreads around the world, as more of it comes to places like the United States, as we get less geographic concentration in China. I don't know if it was this explicit interview that led to that price decline. The market is relatively volatile on a moment-to-moment basis. But I think what he's pointing to is sort of the real story in crypto right now, which is news is driving short-term volatility, but almost all of that news, China banning mining, crackdowns on leverage, increased regulatory activity, all of that is driving long-term good things for the crypto market. All of it is contributing to what I think will be the next leg of the crypto bull market. Short-term negative, long-term positive.
Now, we're still waiting for the potential approval of a Bitcoin ETF by the SEC, but the longer we wait, folks that I've talked to are saying they don't think that's going to happen this year. Meantime, just today, Cathie Wood's ARK Invest filing to create a Bitcoin ETF of their own. What exactly does that mean?
Well, Cathie is a pioneer in many ways, and for good reasons. I think it's a sign that U.S. fund companies, Bitwise among them, but obviously Cathie and Van Eck and others, are confident that we will eventually get a Bitcoin ETF. We are closer than we've ever been before. There's still a few regulatory hurdles, but I think it is still a matter of when and not if. And Cathie is yet another indication that we're getting closer. Will it be this year? Will it be early next year? I don't know, but will we eventually have a Bitcoin ETF? I think absolutely, because we're seeing institutional capital moving into this space. We're seeing greater regulatory clarity, and those are exactly the developments we need. So I see this as a strong endorsement, a strong signal, and also a strong sign by Cathie of just how important Bitcoin is to sort of the disruptive technological future that she talks about. Okay.
Matt Hogan, always good to have you, Bitwise Asset Management CIO. Thanks so much, Matt, for joining us. All right, coming up, the Delta variant causing major turmoil around the globe. We'll bring you the latest on COVID-19 next. Stay with us. This is Bloomberg. The UK is reporting a setback in its fight against COVID. The country reporting nearly 23,000 new cases of COVID-19 Monday, the most since January. More than 84% of adults in the UK have had one vaccine, and nearly 62% of adults are fully vaccinated. Let's bring in Bloomberg's Michelle Cortez with more. So, Michelle, why is COVID still wreaking so much havoc there if so many people are already vaccinated?
Right. Well, we are learning an awful lot of things even still 18 months into this pandemic. One of the things that we're learning is that you really do need to get both of these vaccine doses in order to get protection. Not only that, the more time you are out after the dose and the more time between the two injections that you get, the more protection that you have. So the point there is that it takes longer to be fully protected. And if you're rushing it and trying to get them quickly, you're going to have less protection. That's one thing. The other thing is this Delta variant, the one that came out of India, is just really scary. It is more transmissible than any of the other variants that we've had, and we're seeing it get into people, particularly those who aren't vaccinated at all, at just an unbelievably accelerated rate. So when you're into a place like the UK that does have some protection, we see this pathogen getting to those people who are still vulnerable. And there are some other places, like in Australia, where the entire continent is vulnerable, and it is really going to start causing some problems over there.
So we're seeing the world shut its doors to the UK. Hong Kong planning to ban flights from the UK. It's difficult to get into the US without quarantining if you're coming from the UK. How widespread is this variant in the US? And if you are fully vaccinated, how susceptible are you?
So we are seeing about 20% of the cases in the U.S. are the Delta variant at this point, and that those numbers are increasing. And you're right, everybody is trying to keep that Delta variant out no matter how they can, specifically with these lockdowns. Although, in all honesty, we've seen again and again that really is a pretty weak approach to handling it. So the bottom line is we're all going to have to deal with this variant. And that's why it's important to be doing things like social distancing and masking, which do work against this Delta variant. As far as how concerned should people be, if you have been doubly vaccinated, you are significantly less likely to contract the virus, the Delta variant. And if you do get it, very, very unlikely to have a significant case, to be hospitalized, to need an ICU, or to die if you have been fully vaccinated. If you haven't been fully vaccinated, then you're very vulnerable to this virus, and it is accelerating much more quickly than what we had seen previously. So if you are concerned about it, take some precautions, and really at this point, everyone should be vaccinated.
All right, Michelle, thank you as always for breaking it down for us and giving us your indication of the severity of this. Bloomberg's Michelle Cortez. Appreciate it. Okay, coming up, Tesla plans to recall more than 285,000 cars sold in China due to an autopilot system malfunction. We'll have the latest, plus the unexpected stock reaction next. And fired by bot. We're taking a look at contract Amazon workers whose manager is a machine and an algorithm that determines when they're let go. That's next. This is Bloomberg. Welcome back to Bloomberg Technology. I'm Emily Chang in San Francisco. Electric vehicle stocks handily outperforming the broader market Monday as investors piled in to tech. Tesla shares rising despite a massive recall in China. Our Ed Ludlow has more. Surprising reaction. Ed, you're going to have to explain it to me.
Yeah, it basically affects every single vehicle that Tesla's ever sold in China, Model 3 and Model Ys that are built in China, as well as imported vehicles. The regulator saying it didn't like how autopilot could be automatically activated, maybe potential for sudden acceleration. Tesla is going to patch this virus software patch for free, but it's the latest in a string of tension with regulators in China, which is the world's biggest EV market, incredibly important for Tesla. Though the shares up 2.5% Monday, trading at their highest level since the end of April. It's been a reasonable run over recent sessions for the company. But come with me into my Bloomberg terminal and look at this chart. This is why China is so important. The blue bars are revenue growth, year-on-year revenue growth. The white bars are US growth, the blue bars China growth. China is the growth engine for China right now. I know you have a guest coming up who I think shares that thesis. And the problem is that these setbacks, there is evidence that consumers have looked at other brands in China. There have been issues of crashes in China. There's been some consumer complaints and some tensions with local authorities as well about their employees owning Tesla due to security concerns. There was some other positive news, though. On Monday, CATL, the Chinese cell supplier, has extended its cell supply agreement with Tesla through 2025. That deal for lithium-ion cells was going to expire in 2022. And Elon Musk has talked about how crucial it is for EV makers to secure that supply. So a mix of good and bad news. But you can see Tesla's still trailing the S&P 500 pretty significantly year to date, although a massive run-up of 740% last year. Question, what's it going to take to bring that orange line back up? Emily.
All right. Well, let's find out. Bloomberg's Ed Ludlow, as always, thank you. I want to bring in the analyst who said the recall in China is Tesla's, quote, black eye, Wedbush Securities Managing Director, Dan Ives. Dan, I want to talk about the stock in a moment. Let's first talk about this recall, because it sounds like a big deal if it's affecting every car Tesla has ever sold in China. What does this mean?
Look, I think ultimately this is really the end of a chapter, rips the Band-Aid off. I mean, this has been long going really for the last year with China regulatory authorities. And I think the stock reaction is investors are just happy that they do the fix, that they put in the rearview mirror. But we call it a moment of truth, because ultimately, as Ed talked about, China's the linchpin to the Tesla bull thesis. We think 40% of deliveries next year will come from China. They can have these black eye PR issues again and again. That's why right now investors benefit the doubt. But no doubt, if you look around the corner, this needs to be sort of put in the rearview mirror.
Well, are they right to give Tesla the benefit of the doubt right now, given that there have been multiple issues with China and it is a market that is critical to the future growth of the company?
Yeah, and Big Brother's watching. I think that's what you've seen from Beijing. That they've, if you look at Tesla in terms of Giga, the build out there, and obviously the massive success, it's sort of been a Cinderella story up to this year. Now you've started to see some of those safety issues come to front and center. You obviously have a lot of competition with Neo Xpeng, GM and others. And look, I think right now the street's looking what looks to be a very strong month of June in China. And we think you could be starting to look at over 200,000 units. But ultimately, this stock doesn't continue to go higher unless China goes with it as part of the growth story. That's why this is what I'll call a fork in the road. I believe Tesla is now going to start to work closer and closer with regulators and put this dark tractor behind them.
Interesting. Do you think at all we're continuing to see some of the Bitcoin issues in Tesla play out here? Obviously, we know that China has cracked down on Bitcoin. We know that Elon Musk has, initially, said he was going to accept Bitcoin for Tesla, then said he wasn't, now says he's reconsidering. Does that have any impact here?
I think it's added to the noise and the volatility of the story. At a time where investors, right now, you're starting to see more of a risk-on trade across EVs, and you're seeing not just on the Chinese plays, but U.S. as well. But I think Bitcoin, the big sort of question mark here is, what sort of write-down potential they do in terms of what you've seen from an impairment with Bitcoin. I think that's the biggest question I get from investors. But no doubt, now it just comes down to delivery and a smoother path in China. It's all there for the taking for Tesla and just that overall green tidal wave. But you can't have safety issues like this continuing to pop up. And that's something competition is going to use against them.
I want to move to Facebook, Dan, because huge news for Facebook, a victory today, at least, with a judge dismissing the FTC antitrust suit against Facebook, as well as a suit filed by states' attorneys general saying that the FTC can refile, but they have to prove that Facebook is indeed a monopoly, and they apparently didn't do a good enough job of that with their initial suit. How big a victory is this for Facebook, or is it only a matter of time before there's another crackdown?
Yeah, I think it's a victory, but to your point, the Beltway versus big tech battle is going to continue. And it's not just Facebook, Apple, Amazon, of course, Alphabet as well. And I think this just shows this is going to be a long, protracted battle between the likes of Facebook and other big tech players, and the Beltway as well as Brussels. This is clearly a win. But, you don't put that sort of victory flag up yet. I think it's still a lot more wood to chop as you see more and more scrutiny of big tech, Facebook front and center.
So what do you think? Look, and we saw the House debate, multiple different bills. We've heard from the Senate. Senator Amy Klobuchar told me she's working on companion bills in the Senate, plus her own legislation that she has already pushed forward. How concerned are you more broadly that the government is going to come knocking? And even if it does take years, lawmakers and the federal government seem to be determined to do something here.
Yeah, no doubt. There's a groundswell toward big tech, especially coming out of the pandemic where the strong have gotten stronger. But it's the lack of consensus. That's the issue in the Beltway. 5 different bills, all different sort of versions. The lack of consensus, that's actually ultimately bullish for big tech. So I think you're going to start seeing more and more scrutiny of M&A deals. I think you're going to see more and more of a clampdown there. And I do believe, especially, there's a lot of focus on obviously the Epic Apple battle, as well as just some more of the regulatory in the App Store. But this is going to be a 12 to 18-month battle. And even though today was a small victory, I think going forward, investors are starting, we believe that's right now it's about 7 to 10% overhang in overall tech stocks. Apple alone, it's about $20 overhang right now in the stock.
So if Facebook, let's just use Facebook as an example, if they can't as easily buy the competition, and to be clear, lawmakers have mentioned their acquisition of Giphy as problematic, even though it was approved. If they can't buy the competition like they did Instagram, like they did WhatsApp, is that a longer-term risk? Can Facebook compete with the properties that it already has?
That's going to be the biggest risk, because when they clip the parakeet wings, they're not going to be able to do M&A at the pace. And even smaller deals are going to get second looks and more scrutiny. That's also why I think Microsoft right now is not going to get as much scrutiny. They're going to be more aggressive on M&A. But I think that's the one thing with big tech here is that, when it comes to M&A, they're really going to be much more of a clampdown. And that's going to restrict them expanding those sort of tentacles into other markets. Facebook, especially, look at WhatsApp, Instagram, that's been 2 of the probably most successful acquisitions in tech the last decade.
All right. And also, with regard to WhatsApp, one of the biggest. Dan Ives, Wedbush Securities Managing Director. Always good to have you here, Dan. Thanks so much. All right. Meantime, it's you against the machine, at least at Amazon. Amazon contract drivers say algorithms terminate them by email even when they've done nothing wrong. The world's largest online retailer has used algorithms for years to manage the millions of third-party merchants on its online marketplace and is increasingly using the technology to take over the role of human resources. Joining me now for more on this story, Bloomberg Tech's Spencer Soper, who covers Amazon for us out of Seattle. And Spencer, you open your story today with an anecdote from a delivery person talking about how he was fired by bot. Tell us that story. What happened?
Yeah, it was really interesting. The man's name is Stephen Normandin. He's in his 60s. He lives in Phoenix, Arizona, and he had been making Amazon deliveries through the Amazon Flex app for about 4 years. And the Amazon Flex app is pretty much like downloading the Uber app to drive passengers around, except you're delivering packages instead for Amazon. So it's a gig economy-based thing to do deliveries, and he was doing just fine and enjoyed it and was making some extra money. Then he just had this string of bad luck. He had like some deliveries to an Amazon locker that malfunctioned. He had some early morning deliveries to apartment complexes when they closed. And get a hold of the recipient of the package. He had some early morning deliveries he was supposed to make deliveries to a business at 5 a.m. when the business didn't even open until 8 a.m. So he just had this sequence of events that, caused his rating to plummet. And these ratings are just kind of monitored by algorithm. Amazon knows when it thinks it should be delivered and can track if it's delivered in that time. And so he basically got an email one day telling him, he had been deactivated from the platform and couldn't do this job anymore, make any money doing it. And then he couldn't get anyone to explain to him precisely what happened or get to explain, why he had so many deliveries.
Spencer, as I was walking into the office today, I saw an Amazon delivery woman using her phone to call, presumably, whoever she was trying to deliver a package to. And she said, "Hi, this is Amazon. I'm having trouble finding you." And after reading your story, I had so much sympathy for that position that these delivery workers are in. How widespread is this problem, and how is Amazon responding to this?
Amazon's kind of dismissing our story as really anecdotal, but even people we spoke to inside said, look, this is a huge system, and even if it's very successful, effective, has a low error rate when you're talking about millions of drivers, and that's what we're talking about in the U.S. Close to 3 million people have downloaded the Amazon Flex app. Even a small percentage of those drivers can be a lot of people, and to very abruptly have an income source that you're relying on kicked off, taken away from you, can be devastating. And it's interesting that the anecdote you mentioned is a perfect example. Even if the recipient of that package is very sympathetic and is just glad to get their package, even though it's maybe a few minutes late, an hour late, 2 hours late, what have you, it doesn't matter. Like it doesn't require a customer complaining for that driver to get dinged. It could simply be Amazon's measurement of time, even if the customer was completely satisfied.
So if Amazon's saying it's anecdotal, does that mean it's true, essentially, that these folks are being told in an email that they're fired, essentially?
Yeah, I mean, they're saying that they've invested in these systems and that they and if drivers do actually, right? So that's what it could be, that email telling you you've been kicked off the platform, and then you have 10 days to appeal that. And so you can, but we, through these drivers, we waded through that appeal process, and generally they'll email information in, they'll get a generic response, another generic response a few days later, another generic response a few days later saying we're looking into it, and ultimately a couple of drivers we saw, they get the same exact response. So, it's just difficult paying attention to what these drivers are telling them after they get deactivated.
All right, Spencer Soper, your audio was going a little in and out there, but we got the gist of what you said. Bloomberg Spencer Soper, who covers Amazon for us, will continue to follow your reporting on this. Thank you. Coming up, how the face of networking and making connections have changed as restrictions lift and more people find themselves out and about. That is next. This is Bloomberg. The world is slowly returning to its pre-pandemic roots. According to the TSA, air travel passing through its checkpoints is just shy of levels seen just prior to the global COVID shutdown. And just this weekend, the U.S. saw its first cruise ship depart with passengers in over 15 months, indicating that normal may soon be around the corner. This means a big transition underway for workers who spent much of the last year at home and in virtual meetings. How do they navigate their way back? Joining me now, Alex Trobe, co-founder and CEO of Upstream, a networking company aiming to do just that, help workers make that transition, part of our work shifting series. Alex, thank you so much for joining us. So workers are now going through this awkward re-immersion into the workforce, into the office, and there are some growing pains in doing so. What exactly are you seeing, and how are you trying to solve it?
Yeah, so we're building like this next generation professional network, and like during COVID, everyone was doing virtual events. It sort of exploded for us. We had a really popular virtual events product, but now with the U.S. opening up, the mask mandates are going away or they're ending. The cruise ships, July 4th. It seems like the theme is like America's back. IRL travel, reconnecting with people personally and professionally are the big trends. So, we've started to offer IRL events. So we actually just did one last week in New York and Miami. We had about 200, 300 people at the event. And it's become really popular. And today we're announcing a new product called Upstream Reconnect. And the concept is it's going to show you who you're losing touch with professionally and sort of help you reconnect with them before the relationship goes cold.
So
the idea,
Alex, how is this different from LinkedIn? I know TechCrunch described it as LinkedIn meets Clubhouse.
Yeah, so LinkedIn has had a monopoly for the past 18 years. And they're really good at sort of like the digital resume. So you go to LinkedIn, you see where you've worked, where other people have worked. but they've dropped the ball on a few things for professionals, professional groups, useful tools that help you, better manage your relationships. So we've identified a few things that LinkedIn has sort of dropped the ball on a little bit, and we're focused on those as building sort of a next generation professional network.
So, once people do reconnect, once they're back in the office, and I will say being back in the office, you'll be surprised how quickly things go back to normal and it feels like no time has passed at all. What's the benefit of using an upstream over a LinkedIn if your network is, at least the mass of it right now is on LinkedIn?
Yeah, so we're actually, so this new product, Upstream Reconnect, actually syncs with your Gmail. And it looks at sort of like the from, the to, the duration, the frequency, and it's trying to figure out who you were talking to and have lost touch with, and helps you reconnect with them before it goes too cold. So the first question we're actually asking is, who did you lose touch with professionally during COVID? So, basically COVID started, at least the lockdown started March 2020. Let's say the end is July 4th, or at least the beginning of the end is July 4th. And it's looking at who you were talking to before that and who you haven't talked to during that time. And it's trying to surface those people up and say, hey, you used to email this person every 5 days, but you haven't emailed them in 5 months. Or, you used to talk to this person all the time before COVID, and then during COVID, you didn't talk at all. So we think that type of tool, that type of utility is really going to help professionals sort of get back out there.
What's the longer term use case for this? Once, people do reconnect, is this something that you see people wanting to use, when life is normal, or, or not?
Yeah, no, of course. The first question we're going to ask is like, who did you lose touch with during COVID? We think that's topical. We think people are going to care about that. I care about that. But then as time goes on, I think, we're going to start doing weekly reports on who you're actively losing touch with. So if you used to email someone every week, and then we sort of notice that you haven't emailed that person in a few months, surfacing that up should feel like a magical experience. You're gonna see that person. You're gonna be like, oh, I used to talk to Sarah every 5 days. I haven't talked to her in a few months, and then that should lead to sort of reconnecting with somebody. So, reconnecting, following up, all these type of utility tools, we think are really missing in the professional landscape of making it easy for you to do that.
Interesting. Well, we'll keep our eye on you guys. Alex Tobe, Upstream co-founder and CEO, thanks so much for sharing that with us. Okay, coming up, Marvel's Loki has boosted Disney Plus mobile app downloads significantly. We're going to break down the recent surge. That's next. This is Bloomberg. Disney Plus downloads lead the ongoing streaming war among major providers for the second straight week as its Marvel series Loki powers the increase in mobile app downloads, topping HBO Max. Joining us now, Chris Palmieri, our Bloomberg News LA bureau chief. Chris, why the big response?
Well, this is a pretty nice win for Disney because it shows that they've now really successfully transitioned the Marvel movie franchise over to their streaming business. They've had WandaVision, Falcon and the Winter Soldier, and now this is the third one of their Marvel TV series that's turned into kind of a buzzy water cooler show. And of course, the other big thing is this underscores the importance of having fresh content. So with a new show, they've now sort of seen this uptick in new app downloads. They also had Luca, the new Pixar movie, come out in the last couple of weeks exclusively on Disney Plus. So all that fresh content pays off into engagement with consumers.
Meantime, I wonder how all of these new inputs are impacting Disney's release strategy to theaters versus to Disney Plus. I mean, early in the show, we talked about how AMC had a huge attendance weekend for moviegoers in theaters, and I wonder how Disney is watching that.
Well, I think that, the lesson from F9 over the weekend doing pretty good business exclusively in theaters is that, we'll see changes. This has been a year of experimentation. It's a year of been focusing on the streaming services because the theater business is weak. Disney has July 9th, Black Widow coming out. That's in theaters and for $30 extra on Disney Plus. A lot of experimentation. A lot of people suggesting maybe next year is going to be more like a traditional exclusive release strategy.
So what are you watching for? I know there are some high-profile releases coming later this year. Are you expecting strategy to change?
We've already seen little tweaks. I mean, for example, with Loki and all of the kind of new original series on Disney Plus, they used to release them on Friday. Now they're moved them up to Wednesdays. They're still releasing them one episode per week, unlike Netflix, which of course released them all at once. And so we'll see, ironically, the hottest, show on Netflix right now is Lucifer, which is another Marvel bad guy turned good. They release those all at once. They've, got a backload of episodes. And so right now, Netflix, by some measures, is just killing it in terms of streaming of Lucifer. And as we get the Loki data from Nielsen too, we'll be able to see, how many people are watching those shows, and maybe Disney will tweak its strategy and release them all at once as well.
All right. Well, for my kids over the weekend, it was all about Luca, all these L's. Bloomberg's Chris Palmieri. Thank you, as always, Chris, for stopping by. That does it for this edition of Bloomberg Technology. Tomorrow, we'll have more on President Biden's tough stance on Google with a former executive of the company, now the CEO of Neeva. He'll be joining me tomorrow. Thanks so much for joining us. This is Bloomberg.